Time for today's three-stock lunch. Here with our trades is James Demmert. He is Chief Investment Officer with Main Street Research. A little company, James, called Nvidia that we want to just throw onto your radar if we can. Stock's down a little bit today, but yesterday, $279 billion wipeouts, off 23% from its June high. What's your take on a stock that some may be aware of?
Hi, Brian. This is a stock that investors have another chance to buy. They are eating the lunch of pretty much everybody else in the AI arms race, for very specific reasons we've talked about before. They're early in the cycle of AI. They're the leader in market share by a long shot, AMD in the far distance. Hyperscalers are still spending money like crazy. And the thing, the stock's trading at less than 35 times earnings and growing at 40+% with a new product cycle coming in 2025. So, the recent decline, which happened 6 weeks ago, that recovery was too fast. Stocks, go through two things in corrections. One is a decline, and also they have to go through time. So we're not surprised that stock's been choppy. And down here again, this is where you want to add to the position if you don't own it.
All right. You're the second person in the last couple hours who wants to pick up on the dip. What about Dollar Tree? Speaking of a dip, they're down 25%. This is after already being under pressure and cutting the full year forecast. They're blaming increasing pressure on middle and higher income customers. But I don't know, as Brian said earlier, there's been some share moves to Shein, Temu, to Walmart, Amazon. What do you do with this stock?
Yeah, I think everyone's eating their lunch. I mean, they've missed here big on the earnings and the revenue. And what's really bearish to us is they've lowered guidance at the same time. That's a triple play in the wrong direction. We'd be a seller here if we owned it. The consumer discretionary sectors, as you both know, it's been a minefield. And Dollar General, same thing. We'd stay away. Even at 13 times earnings, I don't think this is appealing.
Wow, 13 times. Okay.
All right, finally, Iron Mountain. Not only a wonderful town in Michigan's Upper Peninsula.
Oh, here we go.
Green leafs, great wings, home of the world's largest Cornish mining pumping engine. But it's also a record management company. IRM, the best performer, James, in the S&P over the last 90 days.
Wow.
What's the trade on Iron Mountain?
Go Michigan. I mean, this company is a consistent grower, and it's a diversified data management company. So here you're getting a much more conservative business model, consistent earnings. They beat on the top and the bottom again. So the stock is, justifiably has done well. The only worry I have here, and our team does, is valuation. It's trading at 59 times earnings. People are willing to pay a high multiple for that consistency. So here, if we own it, we'd hold it. But I'm not so sure I'd buy into the
James,
today's big.
Thank you.
Is that why the company's named Iron Mountain?
I have no idea, but it's a cool town. Home of iron ore.
Maybe someday I'll go see that iron ore. Thank you, James Demmert, and thank you for watching Power Lunch.